G'day, I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia, and I'm going to answer the question for you, at least in my opinion, whether you should buy shares in the Virgin IPO, initial public offering. Virgin is coming back to the ASX after being, frankly, going broke and being bought by private equity. It is being relisted in a couple of short weeks, in fact, just over a week's time. Airlines are generally awful businesses. Let's not mince words. Why? They are really capital intensive. They're really expensive to run. Big planes, very expensive. Jet fuel, very expensive. Facilities on land, planes in the air, really capital intensive. Which means you need a lot of money sunk into it just to get an airline off the ground. We know that because we've seen so many airlines go broke here in Australia. They tend to be awful businesses also because they're largely commodity businesses. You may have a favourite airline, I may have a favourite airline, but if the price is a bit cheaper, are you going to change airlines? Probably yes. And that's true right around the world. What does that mean? It means there's not much pricing power. So if you've got a really expensive business to run and you can't charge a particularly high price, what happens? Your margins tend to be pretty small. Add to that, thirdly, airlines around the world tend to add capacity really quickly. Now that is good for travelers, right? More seats mean lower prices. We get back to the fact it's a commodity business and there's not much constraint on adding new capacity, at least globally. I'll get to a different part of that in a minute. So, very expensive to run, generally commodity businesses, and with competitors that add capacity. By the way, part of the reason I add capacity is twofold. People who run airlines, own airlines, tend to be ambitious, maybe nuts. The old joke is, how do you make $1 million? You start with $1 billion and buy an airline. Plus, governments tend to use them as national trophy assets. Again, what does that mean? Well, everyone wants one. Everyone wants their planes in the air. A lot of them don't care if they lose money or not. So again, lots of capacity being added because lots of governments want to do it. If profit isn't the main motive for your competitor, I've got a saying, you're only as profitable as your least rational competitor allows you to be. In other words, if there's others out there adding capacity, cutting prices, what do you do? If you don't cut prices, you don't get people on your backsides on seats. If you do cut prices, you make less money. So they tend to be pretty ordinary businesses. There is a slight difference here in Australia thanks to a bit of lack of competition and, frankly, government regulation. Now, what does that mean? Well, landing slots. If you want to land your plane at an airport at a good time, you've got to have an available slot. There's only so many planes that can land in a given period of time, and the established players have generally locked them up. That means it's harder for competitors to come in. If you're Virgin or Qantas, that means you've got a bit of protection against others trying to ply their trade. We've seen that. Lastly, though, or additionally, the government stops international players flying domestic routes. It's a protected industry. Now, again, we can decide we think that's great or bad. I tend to think it's not great, but if you like an Australian airline, you might think it's fine. Either way, what it means for Virgin and Qantas is they have protection, at least domestically, from other airlines entering our market, and that helps keep margins higher. Why? Because you can't add capacity if you're not allowed to fly to the country. So that helps our airlines. We've also, by the way, seen Rex go broke, Bonza. Tiger was shut down. Jetstar Asia's just been closed. Compass Mark 1, 2, and 3. Ozjet, Ansett, definitely Ansett, and plenty before, and unfortunately probably plenty after that too. It is a really tough business. So, where does that leave us? Protection at home, good. Good brand, fair. A bit of protection from each other. By the other way, they're all, by the moment, Qantas and Virgin, not doing anything wrong or illegal, but they're being very rational and self-interested by not adding the capacity I talked about. Because even in Australia, even the protection, if one airline adds lots of more seats, you've either got to, again, drop your prices or compete. If they both rationally, self-interestedly say, no, I'm not going to add seats, so I'll have to drop my prices. And the other guy says, I'm not going to drop my prices. Not to each other, again, honestly, nothing illegal as far as we know, but just in pure self-interest. They're keeping their prices high by restricting the amount of capacity. Awful for travellers, great for the airlines. Lastly, Virgin is going to list at a PE, a price earnings ratio of only 7 times. The average market's probably close to 16, and Qantas is currently 10. So it's a really big discount. Now, airlines probably deserve a lower price earnings multiple for the reasons I've just talked about. They generally are awful businesses. By the way, part of Qantas's success and price premium is actually the Qantas loyalty program. I've got a video coming up that, by the way, on our YouTube channel soon, so stay around for that in a couple of weeks' time. But the loyalty program is really profitable. Virgin's is nowhere near as good. And so that's partly why Qantas deserves a price premium. What that means, though, is for the airline operations themselves, Virgin's probably not much of a discount. You know, the premium for Qantas is because of loyalty. So if you strip that out and say, well, how would you compare Virgin to Qantas on the flight basis? The price earnings ratio probably roughly in line, give or take. hard to say for sure. These things can move around a lot. But you know what I'm saying. If you take out the Qantas loyalty program, maybe it is only trading at 7 times earnings. If that's the case, Virgin around the same price, around the same multiple anyway. So where does that leave us? Well, if you think Virgin is going to grow, if you think it's going to grow its profitability, if you think 7 times earnings is a cheap price to pay, maybe you're kind of interested in Virgin. Would I do it? No. Hell no. Why? Because international competition is fierce. And you're effectively betting, literally a bet at this case, the government's current and future won't change any of those rules that stop international players flying into Australia. The coalition at the last election campaign actually said they would, if they were elected, they weren't, but if they were going to let international players fly from Darwin, if they came in effectively into the country into Darwin, fly onwards from there to select domestic destinations. Is that the crack in the door? Is that the thin end of the wedge? Don't know. Again, they weren't elected. Maybe the current government doesn't do it. But you're betting, by the way, Qatar tried to come to Australia and was rebuffed by the government. Again, a bit of protectionism there. But you're betting that's going to remain in place. And I just don't think it is. So, rubbish business. By the way, Virgin's already been broke once. Yes, it was COVID related, but Ansett, Compass. I wouldn't buy airlines. I would not buy airlines, even if they look cheap. Even if, I'm not saying, by the way, the share price won't go up tomorrow or next week or next month. It could, anything could happen. But as a long-term investor, do I want to hitch my wagon, hitch my plane maybe, to Virgin? No, I absolutely don't. And that's why I'm not buying shares in the Virgin IPO. Thanks for watching. Until next time, Fool on.